Hi everyone, today let's take a quick look at Ford earnings. Then we'll take a look at the dumpster fire that is the charts here today. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So Ford tumbled 11% on very weak earnings. They missed second quarter guidance, and you can see that $1.58 down 11.5%. Earnings per share 47 versus 68, revenue 44.8 versus 40 billion. They did say that they're working on raising their quality while lowering costs and reducing complexity across the enterprise, but that is taking time and it is taking money as well. And warranty cost $800 million for the previous quarter, quite a lot there. And they also mentioned that the electric vehicle unit did lose $1.14 billion from April through June. So definitely still losing the EV race. But Ford Blue did earn $1.17 billion in the quarter, so that's also quite good, as well as Ford Pro Commercial earning $2.56 billion. So medium to long term still seems like decent earnings. They need to iron out that EV market, as well as the quality with the company, but it did miss estimates and it is being punished for that. Moving over to Fear and Greed, finished at a 41, down from a 55, massive leg down, straight down, terrible markets, into neutral on momentum. Seems like we're going to hit that 125 EMA now at 5200. We'll see if we can get there. Strength still hovering, still neutral there. Breadth still hovering as well in regular fear. Put call ratio back into neutral, and volatility spiking into that 18.5 area. Getting there, that is what we've been looking for, and it seems like we're going to get it within the next day. And then safe haven demand, extreme fear, and junk bond demand still has not moved. And then looking at seasonality, we were in that bearish period. Seems like we got the bearish move. Is there going to be more to come? Hard to say. And then the rest of the month is expected to be slightly bullish. Moving over to that earnings calendar, Thermo Fisher beating, IBM beating, NextEra missing on the top, beating on the bottom. Services now beating on both. AT&T, they got a little boost on this despite missing on the top line. They might have been a little bit oversold from that Verizon result. Waste Management missing on both. That's pretty surprising for them. General Dynamics missing on the bottom line. And then Chipotle here, they put out really good guidance. They resumed their growth, beat expectations on both, so that was good for them. Ford Motor missing on both, already talked about it. And then for tomorrow, AbbVie, AstraZeneca, Honeywell, Northrop Grumman. And then for Friday, Bristol Myers, Colgate, Palmolive, 3M. And that'll round it out for the week. Moving over to the economic calendar, you can see bad numbers here for the Eurozone. Global Composite PMI, Services PMI, both coming in better than expectations. New home sales missing, crude inventories lower than expectations. Atlanta Fed GDP worse than normal. 5-year note coming in below the previous as well by about 0.2. And then for Thursday, core durable goods, GDP numbers at 8:30. Those could be interesting. 7-year note, auction, as well as Fed balance sheet to round out the Thursday. And then Friday morning, we do get that inflation data in the form of PCE, core and headline, as well as Michigan numbers for 1 and 5 year, plus consumer expectations and consumer sentiment. Moving over to Max Pain, you can see we are way below Max Pain now at a 540, with Max Pain sitting at 554. So we'll see how that plays, but we are way at the bottom of the calls already. So you would expect markets to bottom out around here for the week. Hard to say with how terrible the price action's been. 1.1 million, put call ratio 2.5. We'll see how it plays. Again, we're at the bottom of the calls where you would expect a little bit of bullishness to come in, but watch that price action. It was an absolute dumpster fire all day. Moving over to the charts, you can see we were falling after hours yesterday, straight down here today. Took out 2 levels. Usually that's the most you take out. We touched that lowest one here at 540.34, caught a little bit of a bounce after hours. Still massive selling on that last candle of the day. I don't really expect this to be done. I think we're just getting a little bit of a relief rally here. 540 could see a bounce there. 21 EMA sitting at 547. Not expecting anything to hold. Terrible day, 2.27% to the downside. Finally broke that streak of a 2% down day that the S&Ps hadn't seen for a long time. So terrible there. 55 EMA here on the daily chart, 539.46. Haven't touched that yet. Very close proximity. I would expect at least a touch of that level. Momentum very bearish. RSI not oversold yet. So everything says this still has more selling to go. And honestly, I did talk about this and I did expect more selling, but this was super aggressive, more aggressive than I would have expected. But we did get that catalyst of Tesla and Google both coming in terrible, and those drove markets lower. Moving over to the Tasty charts, you can see that move. Upper ATR, lowest ATR there is at 536.82. At this point, you do expect to touch it. just like we did here back in April, expecting a touch of that level. Maybe even the 55 EMA on the daily chart, which here is at 530.28. Maybe even that 89 EMA, which is down at 530, so that would be another 2% down or so from current levels. Again, huge volume on the day, huge selling, $12.5 on the day, definitely bad. Momentum, obviously bearish, but the only thing here that gives me a little bit of pause is we did get a push to that lowest ATR. That was kind of the expectation. We talked about it being an option yesterday. Sure enough, it happened. Got big volume at that level on that last candle. So maybe you could argue we're going to grind here a little bit. Still going lower, but grinding price action, not this straight knife down that we've been seeing. So we'll see how it plays. Still very much bearish price action. And that 8 EMA is sitting at 547. So same upper resistance that we saw on the other charts. Moving over to the NASDAQ, similar thesis here, but much more bearish, 3.59% to the downside, huge volume. You expect more selling to come, broke the 55. At this point, you don't have any dynamic support all the way to 444, so that could be another 10% down move from here. That would be really aggressive. From top to bottom, we're already pretty low at about 7.5 to almost 8% lower. We'll see how it plays over the next day or two. Definitely have to be cautious on second day moves though, like this. You expect at least half of the first move in my expectation. Again, we're seeing just a little bit of rally after hours. Even if we did get a rally day, I would expect it to be like this. You get a day, maybe two, and then you get continuation lower. So we'll see how it plays. Don't forget we have FOMC next week, so that could be a factor to drive into much lower prices around that 444 area. Momentum, RSI, everything looks terrible. Moving over to the Tasty charts here on the Qs, you can see we already hit that lowest ATR band. That was at 464.90, and then you got that 89 EMA sitting at 460.27. At this point, you definitely expect a touch. Again, relative volume massive there at 2.72. Huge selling all day. If that level breaks, the 144 is sitting all the way at 445, so makes sense. Same almost as the previous charts, $17.25 there. Absolutely terrible on the day. And then similarly here on the 4-hour chart, hitting that lowest ATR band, that is at 465.61. So again, could see slight bounces, grinding price action, but still expecting a bear trend. Everything here says bearish price action to come. Moving over to the Russell and the Dow, even the Russell was down quite a bit on the day, 2.15. Not nearly as bad as it's still in this previous consolidation. We're not breaking these lows yet. Did take out some levels to 1879, but we're bouncing a little bit after hours. Honestly, I think we might hold in this region. We'll see how it plays in tomorrow's price action, but technically you have a high with a lower high here. And if this starts to break, you could see 215, maybe even as low as 213. Momentum fading, RSI breaking down there. You can see that broke here today. Also decent volume relative to what we've been seeing. So definitely looks worse here today than it did yesterday. Even the Dow selling off 1.19, hit the 21, hit the level. Talked about it holding this level potentially. This was the previous high. So if this structure is going to hold as a high, higher, low, higher low with that low stacking on top of that previous high. This is where it needs to do it. Momentum's bearish, RSI's bearish. Honestly, it looks like it's going to break, but again, you can see a slight bounce after hours. I think that's mostly from IBM. They did pretty well on earnings. Moving over to the stocks that moved today, we got Supermicro and Trade Desk down 9.15 and 11.48 respectively. Massive down day across the board. Again, everything looks super bearish, but look at that candle on Trade Desk. Took out this trend, took out the level. 144 EMA sitting down at 84.71. Not expecting any buyers to come in, especially with this broken structure here. Not oversold. My guess is this is a sympathy play to Google with their bad advertising revenue. So everything looks bad with many levels to go here to the downside, pretty much across markets. Moving over to the Mag 7, dumpster fire here, as you would expect, 5.45% to the downside. Huge gap through the level, gapped right to the trend line, and then fell even more, took out the 55. So at this point, 249.41 is the level, momentum bearish, RSI bearish, everything looks bad. Then once we hit this trend down here, then we'll see what happens. Could see a slight bounce from there, but I would expect at least 1 to 2 more days of bearishness, get into this zone, and then we could potentially find some support at these previous consolidation highs. Moving over to Apple and Microsoft, really no change to the thesis, 2.88, 3.59. Everything looks bearish. Apple hitting the trend, interesting. Held the level, Momentum bearish, RSI bearish. Support would be 211.55 if this level broke. We're also right at these consolidation highs from the 17th and 18th of June. And then Microsoft broke the trend right at the level, closed below it, bouncing a little after hours. Don't expect any change there. I would expect continued movement down to that 144 EMA, down at 417.44. Moving over to Tesla and NVIDIA, Tesla down 12.3%, close to the level, 214. Almost filled all of these gaps here. The gap fill would be 209.83. Huge momentum, huge RSI, moving to the downside. If that level breaks, you got the 200 sitting at 205.24. And then looking at NVIDIA, we hit the 55 finally. We talked about that being an important zone. Took that level out. We're now getting close to that 110, 111 area that I was expecting previously. Trend line sitting here right in that same range. Momentum bearish, RSI bearish. Clear topping pattern, high, lower high, continuing to break. And I would expect more bearishness tomorrow with the price target of the trend line at 209.50. Moving over to Meta and Google. Meta down 5.61%. Absolutely terrible there. It is now close to the level at 454.07. Momentum bearish, RSI bearish. You could argue that there's a little bit of divergence there, which is interesting. You can see the previous low was an RSI of 33, and now we're here at a 36.96 with flat price action. So maybe a little bit of strength coming in there. Interesting to see that on Meta. Doesn't mean that I'm looking to buy this by any means. Still looks very weak, and I do expect it to at least hit that level, which is about $10 lower from here. And then looking at Google, obviously they had earnings down 5%. Right now, it's kind of in this no man's land between my levels. For me, 170.95, that's the level I'm looking for right at these wick lows, consolidation highs. We're in the middle of this range. I would be patient here. I would expect more selling. It's been ramping. We talked about the structure being bearish, and now we are definitely bearish below all the short-term EMAs on the daily chart. Moving over to staples and discretionaries, we got staples, 0.09, still hanging in there really well. Held the level 77.50, even on the test. Momentum and RSI are still a little bit bearish, but structurally still hanging in there. And then discretionaries, dumpster fire there, 4% down, momentum and RSI bearish, big gap and fall. With Tesla, 180.10 is now your level for a potential support, but I would be patient. Everything says bearish. Moving over to financials and oil and gas, these also fell today, probably victims of the market. Financials have been extended, they're falling, that makes sense. 42.22 was the level, we've been talking about it, testing that zone again. Needed to hold that higher low if this structure is going to hold up. But then oil and gas, so we're right in that same low. This is the zone we need it to hold. The lows here are around that 142.20 or so, maybe a little lower, 141.89. Momentum bearish, RSI definitely bearish. 140.88 is the level. I still think we can hold this here. We've tested it a couple times. We did get a higher high here with a flat bottom. So definitely some buyers in this zone, critical zone. And if you look at this a little bit bigger here, let's go full screen on that. You can still see that this structure is a high, low, higher low with a high, higher high. And if we're going to hold this higher low structure, I do think that this is where it needs to happen. Let's go ahead and add a trend line here. Something like that might make sense. Honestly, a little bit higher. Right at the lows from here. It's very close to the zone that we're getting into now. If this medium-term structure is going to hold, it needs to do it now. So I'll be watching this one closely tomorrow. Moving over to RIOT and Marathon, you can see 2.33 and 4.5% to the downside, respectively. RIOT looks a lot weaker now. Looks like a high, lower high setting up. Looks like a fall probably down to the 21, down around 1030 or so. And then Marathon continues to crater. 21 EMA should have been a good out indicator. Once that broke, you knew we're headed down to these other EMAs down around that 2060 area. Momentum bearish, RSI bearish. At this point, this could fall all the way down to 1878 again. If this zone here breaks. Honestly, this structure is kind of hard to read. You got a rally, consolidation, break, failed breakout. That's concerning. If it falls back to this level and starts to break down, that could be very concerning. Then you could be looking for a move back down to the 14 area. So something to watch. Need this zone to hold here pretty soon. Moving over to Breadth, this did pretty much what we thought it was going to do. We talked about 20-day Breadth being quite bearish, 50-day lagging a little bit. 20-day continues to lead to the downside. 50 is now starting to move with it. 20-day already in bearish, back into the 50 area. RSI bearish on both of these. Momentum, one more day on the 50 should be bearish. In terms of support, 51.75, maybe this is consolidation of EMAs. And then here for 50-day, 52.81. see what plays there. It is worth noting that this high was a higher high from this previous consolidation, so you could look for a higher low setup, but even with that, there's a little bit more room to the downside in my opinion. Moving over to the dollar, interestingly, we did not get a continuation on the dollar. Got a little bit of a retest. Structurally, we're still intact. I expected this to continue higher here up to that 21 EMA, and I still think that that's what's going to happen. Wicked these previous lows, found some support, momentum still swinging to bullish, RSI still above the SMA. So daily chart, everything's still intact, just a pullback day. I would expect this to continue to spike up into that 104.89 area. But looking at the hourly chart, a little bit more concerning. You can see that breakdown was pretty dramatic. Held the EMAs here, tested that level at 104.41, almost to the penny. You can see that high there was 104.418, and my level is 417, so almost to the 100th right there, tagged that level, and then everything sold off. So that's a little bit concerning, but overall I still think this is a bullish structure. Moving over to yields, this is definitely concerning. Maybe this is what's actually starting to spook markets behind the scenes here. You can see the 2-year down 1.19%, down to that 4.43 level, and look at the 10-year. Absolutely the inverse, going up 0.82, getting back to that 4.28 area, back at these consolidation lows from 789 July, pushing back to that upper trend. So we're getting normalization, continuing to move towards that area, momentum bullish, RSI bullish, while we're seeing that weak 2-year. And then once we get normalized conditions, that's typically when you see quite a bit of volatility in markets. So seems like we're headed there, and markets might be snuffing that out pretty soon. Moving over to JNK and TLT, JNK down 0.36%, momentum, RSI, both looking a little bit more bearish. TLT tumbling, we talked about it looking weak, talking about this level needing to hold, and we had the trend line as your potential support here at 91.23. I still think we're going to touch that. We got very close here today, down 1%, momentum and RSI bearish. So overall, did what we thought it was going to do. Now we'll see if this zone of support holds here. We had the high, lower high, and it is falling. The question is, will this high, will this low, higher low setup continue to hold? Moving over to volatility, move index didn't move a whole lot, but continues to climb. VIX on the other hand spiked as you would expect, got very close to the price target. 18.5 was the level, 18.46 is where we got to, so just short of it. Momentum and RSI bullish, held the higher low, so expecting some higher highs to come. 20 is the next level, maybe as high as 21. Moving over to my accounts, I traded terribly. Honestly, compared to markets, I guess I just participated in the markets, which for me is generally terrible. My trading thesis depends on losing less than markets, and I just did not do that today. But in terms of positions for tomorrow, 220 call, should have rolled that down, didn't do it. Hopefully we get a little bit of a bounce, looking to take that off if the IWM continues to crater. Qs, I had calls going into the close, left those, and they're now expired, and then I have no positions on the Qs going into tomorrow. Just going to be patient, see how markets are reacting. Definitely have a bearish bias, so if we see a little bit of a spike up, might be looking to sell some naked calls into any kind of moves there. And then the XOP, this dude moved down a little bit, still sitting at 142 for the put with 84 cents credit, so just down $16, being patient there. I think the XOP is going to bounce in that zone, so if that structure breaks, obviously I'll be out of this position, but right now it still looks like it could bounce. Overall, patient on the IWM, out of the Qs, and patient on the XOP. Let me know down in the comment section what you think of Ford or the crazy markets that we saw today. Were we due for this? Are we going to see another sequential day like this tomorrow? I don't think we're at capitulation yet. I do think we'll see lower prices, but what do you think? Otherwise, like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.